Good morning and welcome, guys, on this beautiful 29th of September. This is Pounds for Breakfast. As always, I am your host, Dane Vanemas. Guys, I am so excited about this morning session. If you were with me yesterday afternoon, we covered what exactly is happening in the world and what has been happening over the past couple of sessions. And I'm so glad we took the time and we covered this in our last session and time together, because we are about to see that moment, that specific moment in time. We could see everything change. Now, the title for today's broadcast is, are we about to see the next bull run? And this is what it is all about. We're about to see things we've never seen in the markets before. And you are right here, right now, prepared and ready for those exact moves. Now, we are going to be having a ton of fun as we dive into this, but just a quick shout out to those of you that are with us. Gilbert, always, Renisha, welcome. Nadir, Troy, absolutely welcome. Mackenzie, Heinrich, guys, thank you so much for all of your feedback. For those of you that have messaged, for those of you that have gone out of your way to share your story and your trading journey, it means the absolute world to us, right? This channel, the academy, and everything that we do is meant for you, to make your lives better, to improve, to empower and impart information and tools that you can take advantage of the stock market, take advantage the way that can change your life, guys. I'm so passionate about the markets because it has changed mine, and I have absolutely no doubt that it is going to be able to change yours too. So without further ado, I think let's jump in and let's have a look at what exactly we are going to be looking at. And we are going to start with the news as always. We're going to start on the local front and just have a look at what's happening in the world, what's happening in the markets today. So on a local front, we don't have all too much to go through, but it still will be interesting nevertheless. Superb. So guys, on a local front, I think we're going to continue to see news lines dominated by Eskom related items. We've seen this over the past 2-3 weeks. We got a mention yesterday from the president that, listen, load shedding is here to stay, right? And my question is, that's not load shedding. That means we've essentially declared that South Africa has temporary power, right? Load shedding is a really nice way of saying, we're dealing with the load. We're not in that state anymore, right? We're in a position where we have selective power, right? You've got to plan your day based on when you have power. So I think this is something we really need to start speaking a little bit more about and really holding, the powers that be acceptable and accountable to what this is. Is this acceptable? Do people pay their rates, their taxes to have temporary power, right? I think we need to understand this because the knock-on effect on the South African rand, as well as all the other infrastructure, facilities, and business in the country, is directly affected by this issue, right? If people are in manufacturing, if people are in transport, logistics, it doesn't matter where you look, load shedding has got a knock-on effect. And I think people are really, really tired of it as of now. So this is going to become an important topic. We are going to see the effects on the rand, and we're going to look at that in a second. So some really exciting stuff and opportunities we are going to be having a look at this morning. Now, the local news essentially translates into US news, which is ultimately that, stock markets are in this rally, treasury yields retreat, Bank of England pivots, right? Again, right, we see news and we see data come through about, this is the reason why this happens. But remember, as we spoke about yesterday, price action is king. Price action was showing us, listen, markets could essentially go back to that 16th, 17th of June low. And listen, guys, if you haven't watched yesterday's Dollars for Lunch, do yourself a favor. It's not not doing me or anybody else a favor, but do yourself a favor. Go and watch yesterday afternoon session, more specifically around what has happened in past recessions, and what are we seeing right here, right now, and what is that all about? That is going to be super important and valuable for you to obviously take advantage, capture that information, and hold it, because we may very well see the shift in a market, right? This is the 8th or 9th month of this year. We're seeing the whole year in a bear market. We're about to see a shift. If you want to catch that bull market, you need to be ready to take that opportunity by the horns, excuse the pun. So just a quick have a look at the comments again this morning. Shamim saying, let's have some breakfast, Hein. Welcome, Gilbert, always. Guys, you are amazing in the comment section as always. Now, looking at pound sterling this morning, we essentially are going to, as we discussed yesterday, see these guys trade blows. We're going to see the main currencies trade blows. And we're not going to focus too much on any one besides for the dollar. As we know, and we discussed yesterday, the dollar is going to drive the markets and really be determining the fate of currencies, commodities, as well as indices and FX as a whole group and a whole bunch. So that's where our main focus is going to be over the coming weeks, if not for the remainder of the last quarter. Peter van Wyk says, hello team, absolutely welcome this morning. Peter, we are going to have a great time together. So the main focus for today is going to be these initial jobless claims, right? That is coming out at 2:30, as well as GDP data for this afternoon. And now remember, this is going to rock the markets, right? Both of these indicators are essentially going to look at what is happening and is a heartbeat for the pulse on the dollar in the US. So these two combined in terms of gross domestic product for the second quarter of this year, as well as those initial jobless claims, I feel are going to be a big catalyst towards moving the dollar this afternoon. Now, even though this data is going to come out slightly earlier, you're welcome to watch it, welcome to look at the knock-on effects. However, I think this is going to play a much bigger part on the New York Stock Exchange Open, and we will be live at 3:15, not only to interpret this data, will allow the volatility to move, but at 3:30 we'll be trading the New York Stock Exchange, and you do not want to miss that. And that's going to be massive, and that's obviously the main purpose of what we're looking at and focusing on for today. Now, with some of those fundamental data points wrapped up, as always, we want to get jumped into, and without further ado, we want to get straight into the markets. And let's have a look, and we're going to start right up with what is happening currently on the dollar index. So we've covered this obviously in previous sessions, but just keeping a heartbeat and our finger on that pulse, right? We can see very clearly that from a price action perspective, the dollar index is currently sitting at resistance. We've been in this massive bull market. I've said that the data doesn't tie up. The fundamental data is not 1 + 1 is not equaling 2 on the dollar right now, right? And that generally makes me a little bit suspicious that we could see some sort of reversal. Remember, a strong dollar results in dollar-based currencies rising, dollar quote currencies falling, but ultimately the biggest knock-on effect is going to be on commodities as well as indices, as well as even crypto for that matter, right? So we are going to pay special attention to that. Now, moving into Euro USD this morning, again, we are sitting at that massive level of support. To my right-hand side, just behind the Euro USD logo, we can see that we've had this massive trend that we've essentially are at that all-time low. So there's opportunity in the markets everywhere you look. But what is fascinating about these opportunities is these are not small opportunities, right? They're not little scalp positions. These are massive, massive swing trades that we should really consider having a look at. Now, we're seeing that slow to the downside. If I just zoom in there, you're going to see over the last week, even though we've had that push down, we've got indecision on the Euro USD. That's one of the first signs we're going to look at in terms of having a look at that potential weakness. Now, moving into ZAR really quickly, we looked at the potential yesterday of that break to the top side or the break to the north side. However, on further inspection this morning, I'm seeing that we really have some good market structure that we can start to pay attention to on USD ZAR. So I've mapped out this little market structure. For those of you who've paid attention to past shows, you understand where we're at. But ultimately, I believe that the New York Stock Exchange Open will be a deciding factor over this next move off that 78.6. So I would love to be in a position where if we get that negative fundamental data on the dollar, we could potentially look for USD ZAR longs. Again, remember, I'm waiting for that 230 data to come out and to be interpreted. Yesterday afternoon, we got that dollar data and it didn't immediately translate into a weaker dollar. If you guys remember, the dollar initially showed some strength, but ultimately, if we just go and do a quick recap, and I'm going to use a little bit of extra time on this, but if we just do a quick recap on a much smaller time frame, you'll see that yesterday when we got that information, and again, this is the dollar index, we initially were in this moment in time, and then we see that move. In addition, yesterday afternoon, we also looked at the possibility of, are time frames changing? Are we seeing a shift in times that market structures are changing? And I can confirm for you that this week, that is definitely the case, right? Where you see massive New York Stock Exchange moves. However, we're starting to see those moves come into play in full effect at around about 5 in the afternoon. So we're going to continue to observe this week. If that remains the trend for the balance of the week, we will start to shift and have special broadcasts for those of you who have your live accounts. We will be doing New York Stock Exchange Open, right? Everybody will still get access to that. But for those big moves, I will be trading live with those of you who have live accounts, and we will email you the link to those sessions, right? Because if you were with me yesterday, I said to you this could happen and we could see a massive move towards the top side. And that transitions us beautifully into US 30, which is where we saw that transition and where we saw that massive move to the top side. Yesterday afternoon, we were having a look at the possibility of a US 30 buy, right? I explained to you that my sentiment is for a buy on US 30. And we did then see yesterday afternoon at that exact 4:30, 5:30 mark, right? Just after that 5 o'clock mark, we got that break in that structure and US 30 pushed to the top side. For those of you who had your pending orders set up above the 29,700 mark with a trailing stop, you should have been activated and moved for about 1,400 pips. Even if you didn't take the break, right? I caught the break yesterday afternoon, around about 5:30, and that was for around about 4,000 pips top side. So if you caught that, please let me know in the comment section down below. We broke it down in great detail yesterday, and you should have caught that trade towards the top side. I know I got some messages from you guys last night saying you ended the day in profit. And if you ended the day with a profit in these markets, guys, you are in the position to see the best trading activity of your lifetime. Remember just to stay humble, keep risk management at bay, and really focus on your skills, developing your arts and your craft of entering and exiting trades, as well as risk management. So that's just a quick shout out to you over there. Now we're seeing the same thing across the board for both NASDAQ and German 30. We are seeing that initial push to the 29,700 mark. Again, this resistance level being that 6-month low that we've obviously been discussing for quite some time. Now we've punched up into that zone and we are looking like we're getting that sort of pullback. Again, this morning, if we just have a look at what the RSI is telling us in terms of a sneak peek of what we could end up seeing, we are seeing that pullback that happened, but now we're starting to see a potential for a reversal of the structure as well as a long. So how we would deal with this is we're just going to get down to a slightly smaller time frame. And what we want to do is we want to map out, where could we see markets stabilize and where could we see those longs get back into play. And I think the market structure is most accurately identifiable in this way. 1 minute time frame, all we're looking for is that punch, that high point at around about 6:45 this morning. That's 7:46 on your charts. Remember, we are hour forward on MT4. And if we get that break and that punch through, then I would still continue going long. I'm still looking for that 29,700 long position, and I will wait for that long position no matter how long it takes. Now, again, if we punch through that, that would be the signal that we are moving officially and solidly into the next bull leg of the markets. As I've discussed in the recession data that we looked at yesterday, that this is the trend. This is what we see developing, and this is what we see happening in a very, very predictable way. Again, if you look at some of the best investors, some of the best Wall Street fund managers in the world, right, one of the key things that they've identified and learned is that markets repeat themselves. History repeats itself, and it's about looking at the history, understanding where we're at, and anticipating what could happen. Not acting on it prematurely, but anticipating, skilling and preparing yourself so when that opportunity comes, that you're prepared to execute and have a successful opportunity on that. Now, moving up next, we are going to jump into gold as well as having a look at what is happening on the crypto space in a second from now. So gold essentially gave us a little bit of an indication yesterday. We could see some normality coming back into markets. This is a 30-minute time frame. Again, I discussed yesterday that gold is starting to punch through, and it's sometimes one of my preferred symbols or my preferred instruments to look for those breakouts, as well as just normality in the markets, right? Gold is a safe haven asset. And so when markets are unsure, I generally look to gold to see, does 1 + 1 = 2, right? We started to see that push yesterday. Again, I would like to see a bull rally on gold to essentially go back above that 61.8 that you can see right over there. So that blue level over there is that 61.8. We want to see gold recover to officially confirm and make sure we're in this next bull market and in this next bull session. Now, I had a couple questions coming from you guys on Brent, and I spoke about yesterday Brent being a really good buy and a really good value proposition at that $83 per barrel. We have this market structure, this diagonal here represented in green, and that I believe is going to be the market structure we could utilize, again, not only to look for a potential recovery on the price of Brent, but ultimately a breakout further towards the top side. So for anybody who caught that $93 to the $86, $87 mark, well done for you on banking those pips right there on Brent. Now, moving quite swiftly into crypto this morning, we can see that Bitcoin is still sitting at that key moment in time where we are looking for and anticipating what could happen long term. Now, you can see we've consolidated very, very neatly. We are holding up above that 78.6. And essentially we have, as you all know, markets got two options, two directions, north or south. But ultimately, I think it's going to be high tide and high time that we pay a lot more attention to crypto, because again, a systematic failure of traditional financial infrastructure only further pushes the markets to look at decentralized finance as a potential solution to some of the issues that the market is currently plagued by, right? Normal centralized finance has put the markets in the position that they're in from a perspective of inflation, printing way too much money, creating way too much debt. And again, the levels of transparency is a trust-based system, right? If you Google what is fiat currency, paper money, the currency that we currently use, whatever country you're in, you have a fiat-based currency system. It basically means that as long as people trust what the government says about how much this is worth, the system works, right? And in essence, it's tantamount to saying if this is worth something, you should accept that it's not linked to any valuable or tangible physical asset in the background that you can touch or feel. So again, a further collapse of this infrastructure could further lead people to honestly taking crypto in a more serious manner and essentially driving the price of crypto further and further in the direction where it becomes a potential alternative, not only to payment solutions, but as a storage of some sort of value, intrinsic value, right? And this is what we're going to need to really focus on in the coming weeks. And specifically, if we start to see that dollar decay, which we've seen in the past data has shown us that that is exactly the outcome of rising interest rates and an inverse relation with the stock market, that could further lend its hand to crypto saying, well, I've been here for a number of years. Proof of concept is now there. We look at Ethereum, it's now 99% more cost efficient to mine and essentially move Ethereum around the network, right? So a lot of these problems have been solved. Is it crypto's time to shine? Let me know in the comments as we obviously dive a little bit deeper. These morning sessions, we're starting to keep a little bit more informed, a little bit more structured. The afternoon sessions, we will have a little bit more fun, a little bit more live trading opportunities. And then again, we're going to create specific live events for those of you who have your live accounts, right? We get a lot of feedback from clients saying, listen, thank you, but I'm a Globex customer, and what special things can we do together in terms of really trading live from a signals perspective, from a live trading event, and just from a private and more personal mentorship position. So we're going to start to develop and create those structures and keep you guys informed on that. But please watch the markets. And again, if you have any questions, you're welcome to direct message me on Telegram. I've shared my private username and tag within the groups. And again, feedback is always welcome in whatever way, shape, and or form. So guys, we are in for a massive wrap up to this week. I think Thursday and Friday, being today and tomorrow, we are going to see some moves that could essentially set the tone for the balance of this quarter, right? Remember, again, high impact volatility going to be at 2:30 this afternoon. We have those initial jobless claims as well as the GDP, gross domestic data, coming in for the US, which we want to pay close attention to, right? That is going to be absolutely paramount and key this afternoon. So if you're involved in the dollar, please just make sure that you're covering your risk as we obviously get closer and closer into that mark this afternoon. Outside of that, guys, listen, it has been an absolute blast to spend some time with you, and I will be seeing you guys a little bit later as we jump in and dive into the markets for that New York stock session together. But outside of that, guys, have yourselves a safe trading day. As always, remember to live and trade and just do things the Globex 360 way. And I'll see you guys all a little bit later for that New York Stock Exchange open. Until then, as always, much love and goodbye.